The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look here at the German DAX on the daily chart. We'll try to weave this into the story that I'm going to try to go through tonight about the markets last night and a few other things with Apple. But you'll notice here that we had a gap up in the DAX index. Folks, that was basically due to what happened in China, not the fact that they were talking about Trump and Xi getting ready to do a trade deal. It was before that. The Hong Kong market opened up 2.5%. It ended up being up 4.5%. That's over 1,000 points. That's really an outlier event. I'll go through that in just a second. The next index we want to look at, of course, is the FTSE. We also gapped up, but you notice that we just closed basically into the same range. What we've done, you see those black lines there, those are basically equal moves. In other words, the move from September into October and October into November, those are similar moves. That doesn't mean it's going to stop there. It's just that similarity just has to exist. But here's what I wanted to bring to your attention. It'll cover a couple different subjects matter, but we have a very, very dear friend over in Hong Kong, one of our old students from many, many years ago. Over the past few years, I've been to Hong Kong 12 times, speaking in Hong Kong, and I don't know how many times in China. Oh my gosh. Probably 25 or 30. Anyway, look at the island reversal here. You'll see that island reversal pattern where you're down here for 5 days in a row. And on that day before the gap up, which was just several days ago, not yesterday or today, but several days ago, right on the close when the market was right near the high of the day, Brian called. It was about 10:30 at night here. And he said, I really think if this market closes really strong today, we got a chance for an island reversal. And he asked me what the risk would be. And I said, the risk is it doesn't open higher. I said, if it opens higher, you're right. If it opens lower, you're wrong. And he said, that's acceptable. And I said, okay, then take it. Well, it gapped up and was up about 650 points the first day, but yesterday was the big day, folks. You'll see it trading here at 25,416. It's now trading at 26,200 and change. It has taken out the October highs. It gapped up huge today, 2.5% gap up, much larger than the gap you saw just a few days ago. So these are breakaway gaps possibly. Now, if you look at the far left in the chart here, way back in November, you'll notice that you have a island reversal up there. You see how the market's hanging there. And here's another situation that if you think it's going to be an island reversal, you just sell it, and then if it opens higher, that's your risk. So anyway, this one turned out to be really, really good for Brian, and I just wanted to show you what he was doing. And I looked at this, but I don't post a trade for that, so who knows. But anyway, it's no, you're right, Basil. Okay, let's move on here. We have a really interesting question from our good friend Mr. Z about June hogs. Let's put this up here. So we got a lot of information coming in here on June hogs. We'll bring this up here, take a look at it. John was asking about what the pattern looked like in June hogs, and this is what we're looking at since July. John, one of the things that you have to be really aware of here, we've got an open interest in Christmas hogs of about 50,000, and we got an open interest in June hogs of about 4,500. So I would take that into effect. But this is assuming that these hogs are going to be really valuable, because we got these hogs trading at around 60, well, 59, and we've got these trading at 82. They've built in you know, some pretty bad things happening to hogs. And if it happens, you know, you could see hogs at 140. But anyway, you'll notice that there's a 3 drive to a pattern there with a 1.618 expansion, about 3 cents higher. But this is a bullish chart. You know, I'd be looking for any pattern, A, B, C, D, or anything else to get long these June hogs, because they certainly look very, very bullish. The only thing that I mentioned here again is the fact that the open interest in the hogs is, you know, relatively thin. Now, if we take a look at Christmas hogs, let's just get these up here. So we posted these the other day because it was making this double top pattern, and you'll see we had a beautiful double top right there at the old highs that were way back in June. You notice that area of around 60, and it has a double top at that area, and we were suggesting that that's the area where you'd want to be, you know, looking to be, you know, look to go short. Now, if you take a look what's happened here in the Christmas hogs so far, and what was interesting, yesterday with that big down day in Christmas hogs, there was a decrease in open interest. So that's unusual itself. Now that in itself is more neutral than anything, because when prices are dropping and open interest is dropping, that just means that players are exiting the market. It doesn't have any great significance as if the prices were going up and the open interest are dropping. That's extremely bullish. Now, the one thing, if you had you done this trade, and of course we did, you want to put your stop at the break-even point here at the 960 level, so that if it goes up 1.5 points from here, you know, you don't take a loss. But other than that, you just stay with it and see if it's going to, you know, come through with that. Now, we've had another question about Twitter, and I want to bring this up and let you folks take a look at it. Here's what's happened to Twitter over the past few weeks. The question is, does it still have some downside potential? It does, as long as we don't get above $37 a share. If you notice what we did this week here, all we did is we took out the high from August by about 0.5 penny, and didn't go anywhere. So there's still a possibility of looking at this ABCD move to the downside. You know, we're going to look at that. Now, I'm going to do an extensive well, I guess I'll give it a little extensive talk about the currencies here, of course, when we get back from the break, so we can spend more time at it. But I did want to mention one other question that someone had, and that's about Apple. The earnings, whatever it is in Apple, they play those games all the time. But this was the situation in Apple. We were trading at around 222, 223, and the market went all the way down to 206. I don't know where it's trading right now, but you'll notice that 204 is a ABCD pattern. And what's interesting is when the earnings came out for Apple, folks, the NASDAQ futures dropped over 85 points. And then they started to rally, even though Apple stayed down all the day. The reason why they started to rally is because all of the Chinese and Asian indices gapped sharply higher. I mean sharply, 1% or 2%. And this, you know, took selling pressure away from the U.S. markets. And we started to go higher. And then when the news came out about the possible Chinese USA tariff thing, then that's it. So 207, watch Apple at 204, folks. There's a big ABCD down there, and as you know, we like ABCDs. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I'm going to send something that was tweeted last night by the president. And basically what happened was, here's what he said. He said, just a long conversation with President Xi Jinping of China. We talked about many subjects with heavy emphasis on trade. Those discussions are moving along nicely with meetings scheduled at the G20 in Argentina. Also had good discussion at North Korea. Well, with that discussion about trade, it sent the stock futures soaring through the roof, and it also sent the soybeans, wheat, and corn. Soybeans have rallied well over 60 cents a bushel from the bottom that we made down there at 8.47 down near the 78. We didn't hit that 78-cent level. We did in the meal and the oil, but we did not. The one that has been really good to us, of course, was the wheat. We were able to buy the wheat, and it acted extremely nicely too. But when these things come out, these are news items that they will affect the market, as you know. Now, whether they're true or not, remains to be seen. But that's how the market reacts to these things. That's the main thing of what we're keeping an eye on. All right, let's talk just a tiny bit here about the currencies, because I think this is relatively important. We've been talking about this all week long. We might as well, because we're at a critical level. You'll notice that we made that double top up there at the 97 level. You'll know we actually hit 97.01. The old high that we made back in August was at 96.92, I believe, 96.89 or 99. Just a couple of pips. Then you notice that we made that ABCD structure to make that double top. And what I've done is I put in these parallel channel lines. I just drew them in to see if that's what's going to happen, because these are how the ABCD patterns were introduced by H.M. Gartley back in 1937 on page 249. And it showed that if you want to buy, you buy when prices are pulling down into the trend, and if you want to sell, you sell when the prices are pulling up into the trend. And all those parallel lines are clones. I cloned the bottom line, laid it over the top, and as you can see, if we get down to this 95.60 level, we could easily, move up to that second level. Folks, I am not sure yet whether this euro is and the dollar index are finished right here. I mean, this is a pretty big day down in the dollar index and a pretty big day up in the euro. But we've seen this play out before. So what I would do here, since the dollar index is heavily weighted by the euro versus the US dollar, the first thing I would do is I would go to the US dollar here, and we'll just get over here just one second here, and we will see what we've possibly got here. Hold it, where is it? There we go. Here's where we are with the euro. There we go. Let's get the euro up, and you'll see where we were this morning just a little while ago. We've dropped about 50 pips since that level, but you'll notice that at the bottom, you see the bottom there on November 31st. That's when the dollar index hit 97.02. We were hitting 113 in the euro. That was a double bottom. If you move over to the far left where you see October 10th and 11th, you'll see that marking at 1.618. And then if you look again, you'll see the 1.618 marking at 113. That was over, a 5 or 6 day period. That was just trying to show you that we were at a pretty good area of major support. Now, if you look at the large red thunderbolt, the ABCD pattern there, that measured down to 113.15. Well, what's happened since that time, you'll notice that we've rallied from 113 all the way up to 114.55. The high this morning so far was 114.56. We're now trading at 114.10, I believe, and that tells you that this is still in a downtrend, basically, because you made a 50% retracement of the October 12th high, and you made a 61% retracement of the high from the 21st of October, and you made a 1.27 expansion of the high from October 28th. So you had three major ratios there that were telling you, and I use a ratio as another way of describing a cycle, that would tell you that's probably going to be something that would be interesting. Now, that's what I look like. Now, the other ones, we were in this Canadian dollar, and it had a huge break. It broke over 100 pips last night. We got down to the 103 level, which was the first price objective in this. So that definitely made the first profit objective. And as long as we can stay below the 130 level in the Canadian dollar, this is still in a downtrend. So we want to, just sort of keep in mind that that's what we're looking at here. Now, I'm just, showing you what these patterns are. It has nothing to do with the fundamentals, as you know, but that's neither here nor there, that's for sure. Another one that is, you got to watch real closely here, folks. This is the U.S. Treasury bonds. Yesterday we talked about that at that 137.27. They rallied almost a full handle up to the 138.24 level, which was nothing more than the 382 retracement from the 139.27. We came down sharply. Now we're testing this area again at 137.31. Folks, if we go below 137.20, this is not going to be a very pretty chart, because long-term, bonds and notes are going to go higher. Lower. Interest rates are going to go higher, but whether they do it over that period of time or not, we'll have to pay, pretty close attention to. Now, I had one other question this morning from one of our listeners here at TFNN, and that is how much of a rally do you think we're going to see in the stock market? Well, we've had a pretty good rally. This is the fifth day. When we started, well, it's actually the sixth day, because we started last Thursday, well, Friday for some of them, but the 28th and 29th. If we take a quick look here at the this is the ES. We'll just get this up here. We had this big move last night that changed the picture just a little bit, but we're trading around 227.47 right now. We got up to 27.64. The number that I was looking at was 27.78. Now, what's different here is that you'll notice the time period between October the 10th and October the 16th, that 5-day period, the market rallied, quite a bit. It rallied, well over 100 points. But look what's happened since the 28th. That's the same amount of time, and the market has rallied a great deal more. And the reason for that is the fact that if you'll look at the high that was made, the absolute high, which was made on October the 3rd, and if you came straight down and looked at that ABCD pattern to the downside, where it measured to was 2602, and the low was 2602. I don't know how you can get any closer than that. And you notice at that time, it was making a really nice 3 drive to a bottom pattern. And so that's a very interesting one. That 3 drive to a bottom pattern was first shown to me by John Hill out of a book called Key to Speculation by an old guy from the 30s named George Cole. And it was later shown, of course, in Gartley's book, because a lot of these guys shared information back in those days. But you'll notice here that we've had a pretty good rally. Folks, we're rallying in a bear market. This is still very bearish. No matter what they try to tell you, what they try to feed you, you know, it's still, they can tell you it's filet mignon, but it's actually tripe. So don't fall for it. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and we've been asked by Mr. Bob in Spokane, Washington, to take a look at the coffee chart. This is over the past year and a half. If you'll notice here, on the very bottom, back when it was trading in right around September the 17th, it was trading at 95. That was a pretty low price if you went back and looked at the long-term charts like we usually do, be able to see, really see something really interesting in this stuff anyway. But as far as long-term support at 95, I don't know what the cost of production is on coffee, but I remember Simon Lee telling me it's not going to go much lower than this or they're not going to grow beans. And sure enough, you can see what happened. Anyway, you'll notice the 3 drive to the bottom pattern that formed, and then it had the huge rally. It rallied from 95 up to 125. That's 30 handles, folks, at $375 a pound. 35, that's around $17,000 in a matter of a month, actually 3 weeks. And then what happened, it's made a beautiful ABCD pattern. From 125, we dropped down to 116, 116 up to 123, then 123 down to 112, which was a 50% retracement of the move. And yesterday it had a 5-point move to the upside. Went from 112 to 117.80 and change, and it's still going up today. So that's what we're watching here in copper. Coffee. Now, I've had over the past, I don't know how many times people have asked me why I don't trade coffee, cocoa, and sugar very often. There are 2 reasons. One is that I've been a foreign exchange trader for, oh my gosh, long before it became popular. And but the real reason was back in 1973, when I was in the heyday of the old Conti commodity office and just learning the business like everybody else, I was long a day. I was long coffee and cocoa, not sugar, but I was long coffee and cocoa and cotton. Those the big 3. And I remember that I put my order in. Cotton was trading limit up, and I put my order in to sell my 10 contracts. I had about a $20,000 profit at that time. It was a little more than that. Anyway, I sold at the market. It was trading limit up, and you should have been filled limit up or right under it. And by the time, this was the old Squawk Box days, you see on CNBC, and the fill came back. I was filled limit down. And the guy on the other end, I was angry with my broker, and my broker was trying to find out what happened. And the guy on the other end was really, he was very angry himself, and it wasn't his money. But he said, "Do you want the blankety fill or not?" And my broker immediately said yes. And I actually wanted to complain more, but I just shut up, and that was it. Anyway, what happened was I had to be right at the exact time that the market had topped, and it went from limit up to limit down. And didn't trade several times, several days it went limit down. So if I defied that trade, I would have been stuck with a couple limit down moves. So with that bad taste in my mouth, and at the same time I was doing cocoa and coffee with the same type of a situation, but not nearly as dramatic, and that put a bad taste in my mouth. And for 40 years, I never really did very much. I did a couple of sugar trades, of course, but the coffee trade was the first one that we looked at for quite some time. So that's the reasoning behind it. Now with electronic trading, it's not like that anymore, folks. It's really quite simple, to get some of these things filled, and it's just like being a floor broker. I mean, and the commissions are virtually nothing. Back in those days, the commission was $40 or $50. Merrill Lynch was, I believe, charging 90. Conti was charging about 40. And if you you did a lot of volume, you got a lot cheaper rate, even down into the 20s. But that's neither here nor there. Now, I've been at, let's see what the markets are doing here this morning here. We've had a little bit of a rally here. Stocks are still up on the day. And what do we have here? The bonds are holding that level. The bonds really need to hold a 137.26, folks. We're trading at 138.08. That low that we made down here at 138, it's only 6 pips away, but that should be pretty important also. So sort of, keep a close eye on that one. The gold. Now, gold had an interesting pattern, folks. We had that beautiful bottom form in the gold. That turned out to be a tremendous rally of $27 an ounce, which was quite a big rally. And we even had a 60-cent rally in silver. But both of those have not taken out those old highs. Now, in order for gold to remain bullish, in my opinion, we need to get gold above the $1,240 per ounce level. We're at $1,233 right now. So if we get it $6 or higher above that $1,240, then I would say yes, that looks like it could be, better. But yesterday, with that big move that we had, that was a drop in open interest in silver. That's not bullish, folks. It rallied 65 cents, and with a drop in open interest, that's not bullish. That's short covering. So I still think that the gold is still in a downtrend. Now platinum is actually acting much better. It went up and rallied above those previous week's highs to get up to the 382 retracement, and there's a 3 drive to a top pattern in the platinum that I will cover over the weekend. To see how things go. But we've got a lot of big things are happening here for what's going on in the markets as far as volatility. We're going to see more and more volatility because the news, well, the election night, believe me, that I don't know what's going to happen. Well, nobody else does either. But when election night comes, then it's going to be really crazy. If you'll remember on November the 16th, November the 8th of 2016, the Dow Jones was down 800 points. It was a limit down. The S&P was also a limit down. This is before any news came in. This was right after the votes started to come in. It looked like Florida was going to go to the blue side, and it went limit down. It did not stay there for more than a minute, and then it started to bounce a little bit. And we had a guest here, and he actually bought the Dow Jones futures down there, limit down, and it took off. And by the middle of the night, it was already unchanged, and it never looked back. Anyway, those are. We're going to see, I don't think we're going to see, well, you don't know, but, we might see limit moves. So you've just got to be prepared to see what is going to happen. Now, the volatility index has been telling us all along that it's not too excited about anything right now. You'll notice what's happened here. Every time it gets above 24 or 26 or 27, it has some trouble. And here we are, back into the low 20s again. So that's another reason to think that there's something that, could be, pretty bit interesting here. Hold on just a second here. We've got okay, just want to check in with Cy Monley to let me know that the beans, there's a lot of rumor going on in soybeans about there's a possibility of mold due to the rain, and that is a rumor, folks. Believe me, Cy has he has 350 employees, and about 50 of those do nothing but examine plants by using drones and stuff. So they're not seeing any of that right now. So whether that's going to be a big deal or not, will have to remain to be seen. So let's keep an eye on it. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Paff's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're back, and I wanted to mention one other thing, and that was about, we've got a caller from Philadelphia. Mr. Z, how are you doing today, my friend?
Larry, I am very good. Listen, I'm extending an invitation to you when you visit Philadelphia. I want to invite you to join in into a mummers parade. I don't think you've done that in your life, and that's one thing you don't want to pass up when you're in Philly.
John, tell the folks what a mummer is. I know they got a mummers museum about 2 blocks away from where the kids live, and I don't know what it is either. All I know is that on Halloween, man, it's rocking and rolling, that's for sure. What are mummers, John?
Yeah, it is an organization over 100 years old, and these people are engage in lots of good charitable activities. And in South Philly, there's a very large number of people who raise money for charities, and they perform and have very elaborate costumes. They look kooky. And only if you get to see it and get to know the people up close, you say, hey, this is just a lot of fun. So they perform in Thanksgiving Day parades, Christmas parades, private events, and it is generally, it's mostly men. Of course, there's women involved now, too, and dress up in fancy costumes and sing and dance. It's almost akin to old American Indian ritual dances. It's pretty cool.
Wow. John, the question that I wanted to ask you, the hogs, you know, I've been following these hogs because you asked me to look at June. There's just very little open interest in that. But are the December hogs up today? I've not been able to check because I know the news is extremely bullish on the hogs at this time, and yet we have that double top in December hogs, and open interest is dropping in that one. So what's your feeling on that? And
Larry, several questions. The first answer is all the contracts today, December, February, April, June, they're all quiet, very close to unchanged.
Okay.
Secondarily, I will tell you, your trade, first it's, we want to make a distinction between the type of trader you are and the type of trader I am. And we're very distinctly different. And it's not to say one is right, one is wrong. That's not the case. but we are distinctly different. And people know you as a pattern trader and very disciplined and very successful. I am a trader who seeks to capitalize upon intermediate term declines and rallies. And what's attracting me here to hogs is the threats of greatly reduced supplies because of this severe disease in China. Now, December hogs will, at this time of year, Larry, start to undergo open interest decline as traders roll away from these out further in time. That's number one. So that explains in part what you're seeing open interest. Second, you observed earlier these hogs, near 55, certainly under 60, and June hogs up at 80. Be very clear, because of seasonal demand swings, because of seasonal breeding swings in the hog business, and recall, from birth till slaughter, the lifespan of a hog is just 6 to 8 months, so it's very quick. But what you see is that it's the November-December time frame in which hog prices are seasonally lowest because of seasonally high supply and seasonally weak demand. Come June, you have a seasonally high price because of seasonally lower supply and seasonally higher demand. So that feature always exists every year. And if I'm just being very alert to this reduced supply scenario, being akin possibly to what happened in 2014 with the disease in the U.S., that reduced supplies could, and I'm not saying they will, but could drive Feb, April, and June hog prices, 10, 20, 30, 40% higher. And hence my saying, well, I've got to look at the February, April, and June contracts if I'm going to speculate upon that. So I hope that kind of describes what I hope clearly is what we're dealing with.
Yeah, that's great. Thank you very much. I always like hearing what you have to say. One other question: have you heard anything about this potential mold? I talked to Cy Only this morning, and he said that there was really nothing to that. The reasoning for the beans was the fact that the Chinese and the U.S. were talking about trade stuff. So if you hear anything about that bean mold due to wet weather, sort of let the folks know, okay? Because, big move in beans, 60 cents is nothing to shake a stick at,
Absolutely, and thanks for sharing that tidbit coming from Cy. Always like to hear what he's up to, so thanks again, Larry.
Thanks for calling in, John. We really appreciate it, buddy.
Very good. Bye now.
Okay, we're going to take a look now at the IWM, which is the Russell. You'll notice here this morning that last night we closed right at the 61% retracement, and of course with this move that we've had across Asia and even in Europe, we've had pretty good moves, small moves in Europe, but massive moves in Asia. All of them up 2, 3, 4%. Well, the only one that was up 4% was the Hang Seng. But you'll notice here the Russell gapped up above the it actually hit the exact 618 on the opening and has been higher. So the only way that I would even consider, shorting this is if it closed below that 154 level. That would mean that it reinstated that 61% retracement, and this opening, that we usually get, this excitement, is really not much to put your hat on, other than if it continues, yes, that could certainly do that. But we are in the midst of this 5-day plus rally, whatever it is, and then I firmly believe we're going to start down again. That's hate to say 100%er, but who knows? Anyway, if you look at this IWM, you'll notice that we made a butterfly pattern up there at a 1.618 expansion back on September the 3rd, right at the old high of anniversary date. of the stock market in 1929. It topped on September 3rd, and it went down into October 29th. And look at this one. This went right down into October 29th. Wasn't a crash of any kind, but, you know, it was a pretty big correction. Anyway, that's what we're keeping an eye on here with the IWM, so we'll keep an eye on it. So we've got just a lot of things happening. The charts this weekend are going to be very, very important because of the tests we made in the currencies and also the bonds, and my goodness, so many things. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We've been asked to take a quick look at the crude oil. All I've done is looked at it as of yesterday and today. The only thing I can see here is that we have a little bit of an a 3-drive to a bottom pattern here, where the ABCD is perfectly equal down there at $63 a barrel. And it's rallied about $0.50 a barrel since that point. Anything below $63 a barrel now would be extremely bearish. And as you remember, we had a 3-drive pattern on the weekly chart for crude oil that we focused in the newsletter last week. It was at the exact 61% retracement at $72 a barrel, and here, excuse me, $77 a barrel. And as you can see here, here we are at 63.43 a barrel. So those are, this is a short-term pattern. Someone asked about it. That's all I can say. That's what we're looking at. This is a Friday in an up week. Next Monday is going to be very, very exciting, of course, because of we're into November. We've got election on Tuesday, and that will be a market mover in everything. Everything will be rocking and rolling Tuesday night. Don't expect to get any sleep, but it's always interesting. And as the old Chinese curse says, may you live in interesting times. I always thought that was good until I married my beautiful Chinese wife, and she explained to me that it was actually a curse. So we'll see how it ends up with the election night. But it'll be exciting, as it always is. And of course, the news will be blown totally out of proportion. So the other question someone asked me about was silver. Silver, the open interest dropped with a big move up yesterday. That is not bullish, folks. So I would say stand aside. There'll be other times where you'll be able to probably find a situation where you can get a good buying point in silver, but I don't see it right now. Right now, we got the gold trading around 1236. The high was 1238.5. The low was 1231. And, if we get above 1240, gold could probably go. So we'll see. Live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks!